Okay, class. Let's continue. Okay, so this time, compound financial instruments. Okay, which statement is incorrect? Okay, A is a correct statement. Compound financial instruments have both a liability and an equity component from the issuer's perspective. Okay, so sa perspective ng issuer, meron siyang debt and equity components. Okay, so example niyan, bonds issued with warrants. Yan. So yung bonds, liability, yung warrants, equity. So ganun din yung convertible bonds. Okay, so yung host contract, liability, okay, yung option to convert, equity. Okay, so this is on the perspective of the issuer. So na-discuss na natin yung perspective dyan ng holder. Kapag bonds with, kapag convertible bonds, example yan ng okay, hybrid yan, financial instrument. So yung merong embedded na derivative. So sa yun nga, kapag yung derivative ay naka-embed, ang issue whether to bifurcate, okay, or to separate or not. Yan. So sa perspective ng issuer, debt and equity components yan. At anong requirement ng PAS 32? That's letter B. Okay, split the components. So the standard requires that the component parts be accounted for and presented separately. Okay, when to split? So that's letter C. The split of the components is made at initial recognition. So at initial recognition, okay, separate liability from equity. So i-report yon separately. Okay, how? Okay, since equity is residual, the equity component is assigned the residual amount. So delta is incorrect. Okay, dapat yan, the equity, not the liability component, is assigned the residual amount. How? Using with and without method. That is the issue price with the equity component. So example, bonds together with the warrants. O kaya bonds with option to convert. Okay? Minus without. Okay, so without the warrants, okay, without the option to convert. So with minus without, the difference, the residual amount, equity. Okay, actually before ang bonds with warrants, ina-allocate yung proceeds pro rata based on fair value. Tapos yung convertible bonds before, ina-account yon solely as bonds payable. Okay, pero nung inadapt natin ang IAS 32, yun na. Yung allocation hindi na pro rata, residual na yung equity. Tapos yung convertible bonds accounted for na rin as compound financial instrument. Hindi na siya solely as bonds payable. Okay, so to illustrate, number 12, bonds with warrants. The requirement, increase in equity. Okay, so issued 8,000. So the entity issued 8,000, 8% 10-year, 1,000 face value bonds with detachable share warrants at 120. Okay, so 8,000 times 1,000. That's the face value. Okay, issued at 120 with the warrants. So issue price with the warrants. 8 million times 1.2. Okay. Immediately after issuance, the market value of the bonds X warrants, so without the warrants, 8.1. Yung market value ng warrants, 900,000. So again, dati, ina-allocate kasi ito pro rata. Pero yung pro rata allocation is not consistent with the nature of equity. Okay, so para consistent, yon, ang equity dapat residual. So without the warrants, 8.1 lang. So notice the difference created by adding the warrants. So parang ganito ang situation. Kung mag-i-issue lang ng bonds without any other features, so 8.1 basic. Pero kung bonds with added feature, and that is the warrants, 9.6. So kumbaga bonds with flavor, 9.6. Bonds without flavor, 8.1 lang. So clearly, may na-create na difference, yung warrants. At yung difference na yon, that is the increase in equity. So number 12, letter A. Journal entry for emphasis using the traditional entry na yung bonds payable ay naka-face value. So debit, cash. Total proceeds, 9.6. Credit, bonds payable at face value. The amount allocated to bonds, 8.1. So 100,000 premium on bonds payable. Then the equity component, the increase in equity, share premium, warrants. So the split is made at initial recognition. Okay, with and without method. Okay, next. Number 13 and 14, convertible bonds. Okay, so 13, increase in equity at issuance. 14, at conversion. So eventually convert. Okay, so again, how to get the equity component? With minus without. So here's the background. Issued on January 2, 2017. 2,400,000. Term 15 years. Okay, each bond, by the way, kapag silent normally each bond is 1,000. Okay, so usually, kapag silent, each bond is 1,000. Okay, so yung each 1,000 bond convertible into 40, 15 peso per ordinary shares. Okay, issued at 106, including the option to convert. Kung hindi daw convertible, 104.5 lang. So again, clearly, may difference na na-create yung addition ng option to convert. So, with option, 106. Without, 104.5 lang. So, the difference, equity component. So, with and without method, issue price with 2,400,000 times 1.06. Without, 2,400,000 times 1.045. Okay, bonds with flavor with added feature, bonds without added feature. Okay, the difference, equity. Again, the split is made at issuance, at initial recognition. So number 13, letter C. Journal entry. Debit, cash, the proceeds. Again, traditionally, bonds payable at face value. Bonds payable, credit, 2,400,000. Allocated to liability, 2,508. Excess, share, premium on bonds payable, 108. The equity component, share premium. Conversion option. Okay, so again, the split is made at issuance. Now, again, as I mentioned earlier, before nung wala pa yung IAS 32, nung hindi pa nagiging PAS 32 yan, yung convertible bonds, ina-account lang yan simply as bonds payable. Kaya just in case, baka may lumang problem pa sa test bank Baka mamaya, nag-issue ng convertible bonds, di ba dapat i-allocate? Paano ma-allocate? Dapat given yung with at yung without. Paano kung walang way? Walang way para ma-compute yung equity. Ang possibility doon, lumang problem. So, luma yung problem. Okay? So, ang gagawin natin, wala tayong choice. Kung di i-account yan, simply as bonds payable. So, pag hindi natin ma-split so treat entirely as bonds payable. So, baka lumang problem, just in case. Okay, then kinonvert, yun na, second paragraph, after 5 years. So issued 2017. After 5 years on January 2, 2022, all of the bonds were converted into ordinary shares. So we need the carrying amount on that date. And for convenience, yan, para hindi na tayo mag-i-interpolate, so sinabi na naman, use straight line. Ako, kasi kung hindi sinabi yan, ako, ayan, based on 2508, kukumpute natin yung effective rate. So let's get the CA on the date of conversion. Okay, face value, 2,400,000. Okay, the premium is 108 to be amortized over 15 years using straight line method. So nangyari yung conversion after 5 years, 10 years before due date. So the remaining premium, 108 times 10 over 15 using straight line method. Okay, face value plus an amortized premium, that's the carrying amount on the date of conversion. And that amount from liability transfer to equity. And that's the total increase in equity. Answer? Okay, number 14, bravo. Now, gawan nga natin ang entry. Okay, so again, yung carrying amount ng liability on the date of conversion, simply from liability, lipat yon sa equity. Kaya lang, anong particular components ang affected niyan? Ano yung 2472 na yan? Anong mga accounts yan sa equity? Okay, and what will happen to this 36,000? Yan, di ba nag-credit tayo on initial recognition ng share premium conversion option? Okay, ngayong na-convert na, anong gagawin dyan sa 36,000 na yan? Okay, so ang sabi ng PAS 32 dyan, pwede siyang with or without transfer. So, pwedeng hayaan na lang yan. Let it remain as share premium. Okay, conversion option. Or pwede rin i-transfer. Kakancelin yan, then transfer to another share premium. So either is acceptable. Okay. For convenience, pwedeng without transfer. At pag ang ginamit ay no transfer, anong journal entry? Okay. Debit, bonds payable. So cancel, bonds payable. Debit, premium on bonds payable. The balance, 72,000. Ito yung carrying amount ng liability. So from liability, transfer to equity. So pag sinabing no transfer, yung 36,000 na ito na share premium conversion option, kahit na convert na, share premium pa rin, conversion option. Okay? So ang maganda dyan, hindi mo na babalikan yung naging entry 5 years ago. Okay? So credit, share capital at par. How much? Each bond, so 2,400,000, i-divide mo ng 1,000. So each bond is normally 1,000. Times 40. One bond, 40 shares. Times 15 par value. Total par value, 1,440,000. Excess over par, share premium. So again, from liability to equity. In particular, these are the components of equity affected. So no transfer. Okay? Alternatively, okay, so for convenience, wag mo nang i-transfer. Di naman required eh. Kaya lang, for emphasis at para ma-highlight na na-convert na yung bonds na yan, pwedeng with transfer. Okay, yun nga lang inconvenient kasi babalikan mo yung nangyari 5 years ago. So entry with transfer from one component to another. Debit bonds payable, the same. Debit premium on bonds payable. This time, cancel share premium conversion option. Okay, so ang maganda dyan, maha-highlight na na-convert na. Okay, and also dahil wala na nga naman yung conversion option na yan, so mas okay na wag mo nang i-report as such kasi nga na-convert na eh. Yun nga lang, inconvenient. So kaya for convenience, pwedeng wag nang i-transfer. Credit, share capital, the same. Then credit, share premium. Lalagyan ng description. Anong particular share premium? Excess over par. Yan. So yung excess over the par value, yun yung share premium. So parang nilipat from conversion option to excess over par. The net effect on equity is the same. Ito pa rin yung net effect. Okay? Now, with or without transfer, the choice is a matter of policy. Okay? Kasi pareho namang acceptable yan. It is a matter of preference. Kung gusto mong convenient, no transfer. Kung gusto mong i-highlight, okay, na na-convert na, with transfer. Eh, what if hindi na-convert? So, pag hindi na-convert yan, after 15 years, magbabayad ang entity ng cash. How much? 2,400. Kaya on due date, at hindi siya na-convert, simply debit, bonds payable, credit cash, 2,400,000. Now the question, what will happen dito sa conversion option na ito kung hindi siya na-convert at maturity? So, lagyan natin ng note. Okay, again, ito yung equity component. So, ginawa yung split at issuance. Eh, after 15 years, hindi na-convert, what will happen to that? So, depende uli yan kung with or without transfer. Kung no transfer, no entry needed. So, it will remain as equity component. Okay? Kung with transfer naman, kakancelin yung option. Okay? So, i-credit, share premium din. Expired conversion option. Just to highlight na nag-expire na. Okay? So, anong na-highlight dyan? The split of the components is made at initial recognition. So, whether converted or not, whether in-exercise or not yung option, yung 36 na yan, equity na yan. Okay? At kung hindi niya kinonvert, pwedeng wala ng entry. Or i-highlight na nag-expire na yung option. Okay? Now, paano kung ni-retire before due date? As discussed earlier, kung i-retire at maturity, walang gain or loss yan. Simply debit, bonds payable, credit cash. Paano kung ni-retire, no? Prior to maturity. So, sabi nga natin kanina, i-compare mo yung carrying amount on the date of retirement at yung retirement price, gain or loss yun. Paano kung yung ni-retire before due date, convertible bonds? So, yun ang nangyari sa number 15 and 16. Convertible bonds retired prior to maturity. So, ganito ang concept. On issuance, in-split yung components. May liability, may equity. Kaya kung i-retire yan prior to maturity, effectively, dalawa ang ni-retire. Liability and equity. Yung retirement ng liability, may gain or loss doon in P&L. At yun ang question sa number 15. So, ito yung liability component. At paano nga kino-compute yan? Carrying amount less the retirement price. So, yung retirement ng equity, walang gain or loss yan. So, direct deduction yan from equity. So, yan naman yung number 16. So, 15 is the liability component. Okay, gain or loss on retirement. Yung number 16, deduction from equity. Okay, as a result of retirement of the equity component. Okay, so although not required, i-allocate natin muna yung issue price. So here's the background. Issued on January 1, 2017. Okay, face value 10 million. Okay, issued at face value. Ha? So, issued siya at face value. Kaya lang, okay, convertible. So, term, 10 years. Okay, rate, 10%. The debenture is convertible into ordinary shares. Conversion price, 25 per share. Interest is payable half yearly. So, 10 divided by 2. Ang nominal rate, 5%. Okay, this time, hindi given yung issue price without. Instead, ang ibinigay dyan, prevailing rate without. So notice the difference, again, created by adding the option. Kung ang bonds ay convertible, 10% lang ang babayaran ng issuer. Kapag non-convertible, mas mataas ang babayaran, 11%. Or semi-annual, kapag convertible, 5%. If not, 5.5%. So clearly, may difference na nakikreate yung addition of the option. Okay? So issued at how much? 10 million, including the option yun. Eh paano kung without? Not given. Let's compute. Okay? So to allocate the issue price. So issue price without how much? Discount the cash flows. The principal and interest at what rate? 5.5%. Ito yung prevailing rate if the bonds are not convertible. Term is 10 years, pero dahil semi-annual times 2, 20 payments. So principal, interest, discounted at 5.5%. That's the prevailing rate, semi-annual. So 11 divided by 2, so 5.5%, 20 periods. So if the bonds are not convertible, ang issue price lang yan, that amount. So clearly, may value yung option. So dahil nilagyan ng option, magbabayad ang entity ng mas mababang interest. So with is 10 million, issued at face value. Without, so the difference, equity. Again, the split is made at issuance. Whether ma-convert or not yan, may equity component. Okay, now, so notice although issued at face value, okay, effectively issued at what? Discount. Okay, so kasi nga, kung without, ito lang ang issue price. So, ito yung equity component. Okay, so since effectively issued yan at a discount, ito na rin ang effective rate. So, walang transaction cost. Again, mako-complicate na naman yan kung may transaction cost. Kasi pati yung transaction cost, kailangan i-allocate. I-allocate do sa liability and equity. Okay, so again, dahil walang transaction cost, ito na rin ang effective rate. 5.5%. Then what happened? After 5 years, so 5 years, 10 years ang term, no? 5 years remaining. Okay, the convertible debenture has a fair value of 11.2 million. Nag-offer yung entity na iba-buyback na, okay, yung debenture, yung bonds. Okay, at that amount. So tinanggap naman ng mga holders. Okay, so at that date, at the date of repurchase, entity A could have issued non-convertible debt with a 5-year term. So ito na lang kasi yung remaining term, bearing a coupon rate of 8%. So divide by 2, that's 4%. Yun ang market rate at that time. Okay, so ganitong situation. 5 years before due date, ni-retire. At how much? Ito yung retirement price. 11.2. At dahil convertible yan, dalawa yung ni-retire. Liability and equity. Again, yung liability, pag ni-retire yan, before due date, may gain or loss yan in P&L. Yung retirement ng equity, direct deduction yan, pay from equity. At paano ko computein ang gain or loss? Carrying amount minus the retirement price. Okay, so paano ko computein ang carrying amount? Using effective interest method, same format. Discount the cash flows using the original effective interest rate. So 5 years remaining, so papalitan mo lang ito. Instead na 20, gawin mo na lang 10. 10 periods remaining. Okay? Then, magkano yung retirement price? Okay? So kung magkano yung fair value on the date of retirement. And ang prevailing rate that time, 4%. So to get the gain or loss in P&L as a result of the bond retirement, okay, we need the carrying amount and the retirement price. And the carrying amount, That's the amortized cost. So same format. Palitan mo lang ito, gawin mong 10. So 10 periods. Okay. Principal. Interest. At 5.5%, 10 periods. That is the amortized cost. Okay, so yan yung carrying amount of the liability on the date of retirement. And how much was paid? 11.2, kaya lang may equity yun. Magkano dyan sa 11.2 yung para sa liability? So, kung magkano yung fair value at that time. So, how to get fair value? Same format. Papalitan mo lang yung rate. So, ang prevailing rate that time, 4%. So, principal. Interest. At 4%, 10 periods. The cash flows discounted at the original effective rate, amortized cost. The cash flows discounted at the prevailing rate, fair value. And that is the retirement price. Okay, so yan yung retirement price. Get the difference. Carrying amount minus the retirement price. The difference, gain or loss. And this one is loss. The company paid more than the carrying amount. And that loss is recognized in profit or loss. Okay, so number 15, letter C. Specifically, that amount is loss. Okay, magkano sa equity? Okay, retirement price with is 11.2. Ito yung in-offer. So, ito yung retirement price without yung fair value ng liability. So, the difference, yun yung amount paid to retire the option to convert. At yung amount na yan, paid to buy back, to retire, yung option to convert, deduction yan from equity. So, 16, letters. Okay? So again, kapag compound ang financial instrument, may debt, may equity yan. Split the components. Account and present separately. When? At issuance. How? With and without method. So equity component is residual. And in case of retirement before due date, split the payment. Okay, so account separately the retirement of equity and the retirement of liability. Retirement of liability, gain or loss, P&L. Retirement of equity, no gain or loss in P&L. Instead, equity deduction. Okay, what if, para mapapayag, no? Para mapapayag, ito kasi ni-retire what if walang pera yung entity, walang cash? Para ma-encourage ng entity na yung mga holders ay i-convert na lang yung kanilang holdings into shares para hindi na mag-out ng cash ang entity, pwedeng i-modify yung terms to encourage, okay, to induce the holders to convert. Paano yun ina-account? Okay, pag nagkaroon ng modification of terms. Okay, so that's number 17. The requirement, amount to be recognized in P&L as a result of amendment of the terms. So what happened? Here's the background. Issued on January 1, 2017, 1 million convertible debenture. Okay, so ang original conversion price, 25 per share. So each 25 peso bond, 1 share. Okay, after 5 years, to induce the holder to convert the convertible debenture promptly, Entity B reduces the conversion price to 20. So ang original 25. Okay, each 25 peso bond, 1 share. So ginawa na lang 20 para ma-induce, okay, yung holder na mag-convert na lang. Okay? Now, magkano yung market price of the shares on that date? 40. Okay? So, let's consider the effect of the amendment on the number of shares to be issued. Okay? Under the amended terms, 1 million. Divide by 20. So, dahil nireduce to 20, under the amended terms, ang shares to be issued, 50,000 na. Under the original, 1 million divide by 25, 40,000 lang. So merong additional or incremental shares to be issued, 10,000. Okay? So kung ikaw nga naman yung holder, kung dati 40,000 lang, ngayon 50,000 na. So you may be induced to convert. At magkano yung market price ng shares at that time? Okay, 40. Kaya yung total value ng incremental shares, 400,000. Yan yung naging effect ng amendment. Additional shares to be issued, okay, at ang market price on that date, 40. Yung effect na yan, okay, yung fair value ng incremental shares to be issued na yan, expense yan in P&L. So, number 17, letter A. And what is the entry? Okay, if you want to be more specific, pwede mong sabihin dyan, debit, bond, conversion, inducement, expense. Ano daw? Ang haba naman. Sige na nga, expense na lang. Yan. At yung expense na yan, i-recognize yan in P&L. Yan. So you may use any appropriate account. Yan. Bond conversion, inducement, expense. Yan. Credit, share premium. Okay, additional share premium conversion option. So effectively nag-increase yung value ng option to convert. Okay? So again, yung expense recognized in P&L. Okay, number 18, presentation of bonds payable. So again, as noted earlier, sa ating first topic on liabilities, okay, yung financial liabilities other than yung yung trade and other payables at yung provisions na nag-qualify as financial liabilities, pine-present yon separately. Okay? So, yung mga borrowings in particular yan. Yung mga borrowings na yan, naka-report yan, pwede sa current, pwede sa non-current, depende siyempre sa due date. Okay? So, in relation to bonds, pag ang ginamit ay traditional method, may face value, may premium, may discount, may issue cost. So how will those items appear? So that's the question in number 18. So ang sagot dyan, bravo. Face value plus kung merong unamortized premium or minus yung related discount. Minus kung meron man yung bond issue cost. A, C, and D are incorrect presentation. Incorrect statement siya. Okay, so that's accounting for bonds payable. Again, notice madali na yung first 3 topics natin on liabilities kasi na-discuss na natin yan eh. Yung trade and other payables, yung accounts payable, na-discuss na natin sa inventory. Yung notes payable, na-discuss na natin yan. Okay, yung counterpart niyan sa asset, notes receivable. Ito namang bonds payable, ang counterpart sa asset niyan, investment in bonds. So different perspective lang. Pero di ba yung magko-compute ka ng issue price, paano ba yung effective interest method, same lang. Okay? So yan ang first 3 topics natin on liabilities and those are what? Financial liabilities. Okay? Next, mga special topics na tayo. Okay? So next time na yan. Okay? So hanggang dyan lang muna. Okay? Bye-bye.